Hey, everybody. For the most part, you cannot invest in companies that have a monopoly in their industry. For the most part, monopolies are illegal. But there are some legal monopolies that exist that you can invest in right now, and we're going to talk about a couple of them today. Tyler Crowe is joining me. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get a message from our sponsor, The Motley Fool, the top 10 stocks to buy right now. It's the best way to support this work we're doing. Again, fool.com/Frankel. So I'll go first because mine's the one that you've, in typical me and Tyler style, mine's the one you've probably heard of. So mine is Sirius XM, the satellite radio company, ticker symbol SIRI. If anyone could tell me the number two satellite radio operator, I'm all ears. I don't know. They pretty much have a monopoly on the satellite radio industry, and it's a legal one. Um, it was Sirius Satellite Radio and XM Satellite Radio. They used to be two separate companies. They merged, and the reason they were allowed to merge essentially was because they compete with streaming music apps, normal terrestrial radio stations that you like FM and AM radio that you could. So there is competition, but in terms of satellite radio, it's serious. Um, Interesting business. Terrible performing stock lately. It declined by 60% in 2024. Warren Buffett's been buying up shares. It's not why I like it, but it's worth mentioning that Berkshire Hathaway owns 35% of it. The company has really kind of simplified its stock structure. There used to be Sirius XM stock, then a bunch of tracking stocks from Liberty Media and things like that. They've kind of consolidated all that. And it's a very cheap stock right now. It's trading for about 7 times forward cash flow, or forward free cash flow, rather, based on their guidance. And to be fair, there's a lot not to like about Sirius. I'm going to talk about some of that first. The revenue has essentially been flat since 2021. They actually expect revenue to slightly decline in 2025. The number of paid subscribers to Sirius peaked in 2019 and hasn't regained that peak yet. So it really hasn't been just like a pandemic issue. Um, in a lot of ways, the business kind of stagnated. They also are a heavily indebted company. Sirius is a roughly $7.5 billion market cap business. They have almost $11 billion in total debt right now. So there's a lot not to like. But management is doing a lot of new initiatives that I think really could reinvigorate growth um, that they should have done years ago. They've really kind of, for the longest time, insisted that they are a premium subscription product. Now they've rolled out a free ad-supported version um, in order to, one, compete with a lot of streaming music apps that do have free ad-supported versions. It's going to be free in certain new vehicles that have certain technology capabilities. This model has the ad-supported model. There's also an ad-supported cheaper tier that costs money that other subscribers can get. This has worked out really well for Netflix, for Disney Plus, for a lot of other streaming businesses. And I'm surprised it took SiriusXM so long to launch this, but it could really. I mean, Netflix has 70 million subscribers on their ad-supported tier because people like saving money, and some are willing to watch ads to do it. They've kind of, created content blocks that people can buy instead of buying the full premium subscription for what $32 a month or whatever it is. You can get a music only package for $8 a month. You can get a news only package for $5 a month. The sports package, a lot of people like Sirius just for sporting events because you can listen to, any NFL, any games that are on. The sports tier is $8 a month. I love these initiatives that they're doing. I think they should have done them sooner. In the meantime, this is a stagnant revenue but high profit business that could be worth a look. They were generating over $1 billion in free cash flow annually. I mentioned only a $7 billion market cap company. They have a nice dividend. They yield about 5% as of this recording. So really impressively profitable business. They just need to figure out, or they just need their new initiatives to really translate the growth, and then I think that the market will reward that with a higher valuation. Um, Tyler, what is, since I know I've already kind of teased this that no one's going to heard of it. No one will have heard of it. What legal monopoly are you looking at?
Well, it's kind of a legal monopoly. in the sense of like, it's not like a nationwide monopoly, but there are a lot of businesses out there that kind of have localized monopolies, and businesses that own those can be spectacular wealth creators. And I want to focus on, surprise, surprise, weird, limestone quarries. Um, it sounds really dumb, right? But when you talk about local and regional monopolies, things like aggregate pits and limestone quarries, they basically have monopolies in their respective regions. Actually, it's funny because Peter Lynch even like opined about rock quarries in one of his like investing books. This was what he said about it. He's like, no matter how good the rocks are in Chicago, no Chicago rock pit owner is ever going to invade like your territory that you own in Brooklyn, because like the amount of it would cost to like transport rocks or limestone from, one region to another, you'd eat up all your profits. It's a cheap product that costs a lot to move. So you tend to have like these geographic monopolies where you are, because you're the only game in town. And that's very true of US Lime and Minerals. It says that on average, its sales come from places less than 400 miles away from any quarry, because nobody else is there, and transporting it any further than that would be prohibitively expensive. It's limestone is surprisingly a very much in need product. It's used to make cement. That's kind of like the primary thing, but it's also, we use it for treatment of water to, make sure that we have the right acidity levels for drinking water. It's used in environmental treatment to like, clean up smokestacks. We use it for pH balancing for soil. So it has some agricultural uses as well. So you kind of go up and down the industrial, commercial, agriculture, municipal water treatment and wastewater treatment. Limestone, it's big, it's in need, and so like it's probably not going to go any away anytime soon. We can't AI our way out of water treatment. You know what I mean? So to me, this is one of those hyper durable businesses, and not only because of the legal monopoly or regional monopoly that limestone quarries tend to have, but U.S. Lime and Minerals runs this mine, which is essentially a mining company, in a very like conservative manner. It has more cash than debt on its books, which is rare for mining companies. Mining companies almost always carry a lot of debt. These guys are virtually debt free. They carry loads of cash. It doesn't take a lot of capital spending to get things, to keep mines up and running. It's a pretty, low cost of capital sort of business. And so it can just spit out free cash flow, despite it not exactly being a very big business. They've only got like, I don't know, 300 million in total assets that have been depreciated for 30 years on its books. And so this is just one of those businesses that's very conservatively run in what I would call a regional monopoly. And if you're looking for something that's going to like last for decades and spit out money for you, this is like the kind of monopoly you want to look for.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.